Hey guys, it's April 7th, 2025, and Wall Street is in turmoil. Stocks experienced extreme volatility today after President Trump announced new tariffs on China. Let's dive into the details. First up, the Dow Jones Industrial Average closed down 0.91%, wiping out gains from 2024. It had a record intraday swing of over 2,500 points. The S&P 500 also took a hit, closing down 0.23%, nearing records set during the Great Depression for consecutive large losses. On the other hand, the Nasdaq Composite managed to close up 0.1%, but it still wiped out its gains from 2024. The Russell 2000 fell to its lowest level since 2023, entering bear market territory. Now let's talk about the catalyst. President Trump threatened additional 50% tariffs on China if they don't remove retaliatory tariffs. He claimed there's no inflation and called for Federal Reserve rate cuts. The White House confirmed there won't be any postponement of these tariffs. Experts are raising red flags about a potential recession. Morgan Stanley pointed out that an oil price drop of this magnitude is historically a recessionary event. Larry Fink, CEO of BlackRock, believes most CEOs think the US is already in a recession. Jamie Dimon from JP Morgan Chase stated that these tariffs will boost inflation and slow growth. Leon Cooperman advised selling strength and buying weakness cautiously, as he believes the market bottom isn't in yet. Let's talk stock movers. Janover soared 1,000% after announcing a digital asset treasury strategy focused on Solana. Apple sank 5% due to additional China tariff threats. US Steel advanced nearly 9% after Trump ordered a review of Nippon Steel's takeover bid. Automakers like Stellantis, Ford, and GM continue to fall on tariff concerns, with GM getting downgraded to underperform by Bernstein. Tesla dropped over 5% partly due to CEO Elon Musk's political activities. Among the Magnificent Seven stocks, Alphabet, Amazon, Meta, and Nvidia were up, while Apple, Tesla, and Microsoft were down. Restaurant stocks like McDonald's, Chipotle, Darden Restaurants, and Starbucks fell due to recession fears and potential impact on consumer spending. Other market indicators are also showing stress. The 10-year Treasury yield rallied above 4.15%. U.S. crude oil fell about 2% on recession fears. The dollar index weakened. Bitcoin dropped below $80,000. The volatility index, or VIX, spiked to 60, indicating extreme fear in the market. Globally, Asia-Pacific markets extended their sell-off, with Hong Kong leading the losses. European markets also tanked at the open. For expert opinions, UBS noted that market volatility is likely to remain elevated. HSBC mentioned that a short-term bounce is possible, but uncertainty remains. Jim Cramer advised investors not to panic and to stay the course. The acting SEC chair stated that the stock market is functioning as designed. That's all for today's update. Stay informed and stay calm. Thanks for watching, and don't forget to like, subscribe, and hit that notification bell for more updates. See you next time.